Over the past 2 years, a key trend across the big African telecoms has been separating their fintech units into standalone enterprises. MTN did so back in 2023, selling a stake to MasterCard that valued the unit at around $5.2 billion. Airtel Africa spun off its mobile money unit while selling minority stakes worth about $300 million to MasterCard and the asset manager TPG. Now, compared to her peers, Safaricom, with its $5 billion market cap, is still the outlier, with management arguing that there is no compelling reason to separate their financial services unit from the rest of the firm's GSM and fiber operations. Now, as a business, M-PESA handled transactions worth nearly $20 billion on the app alone in the fiscal year ending in March. Average revenue per user rose by about 16%, translating into a near 20% rise in revenues. With a user base of 32.4 million people and over 630,000 merchants, M-PESA is now Safaricom's biggest single revenue line, accounting for about 42% of total revenues. Now, of course, on paper, this looks like a pretty valuable enterprise, so why not spin it off? Would Safaricom's M-PESA unit have a better valuation compared to the standalone GSM business? Well, CGTN's Ramanyang explored those arguments for and against with Safaricom's Chief Financial Officer, Dilip Pal. Take a look.
I think it's the motivation of why, maybe the question for MTN or even the Airtel Africa, they have done this, right?
Because for them, it might be a value trap.
It could be a value trap. So you look at it different perspective. Where are you? Is it for raising more money or increased valuation or regulatory consideration? Right? So there are three things which can, some countries like you almost have to do it differently.
But it's a legal requirement. You have to keep your fintech business separate from your GSM business.
Yeah, like in Ethiopia. You haven't asked that question. Let me confirm you. In Ethiopia, the M-PESA, it's run as a separate company. It's a subsidiary of the Safaricom Telecommunication Ethiopia. So the considerations are different. I said regulatory, your valuation, or you're raising money, right? I think that's what is, every company has to evaluate and assess what does it work. And also see what has worked for you. For us, I think valuation is a less of a problem because we disclose so much of M-PESA information. For anybody to look at us as a company, you can do a lot of analysis and do evaluation. Yeah, is it to the extent of, is it 100% accurate? No, but I think you don't need 100% accuracy to be able to do what you need to do. Yeah. Then comes raising money. Yeah, do we really need to raise a lot of money? We all need money, but to extent, is it something that we have to do it in the next 6 months? We have to do it under time pressure to do it.
Because realistically, Safaricom doesn't have problems raising capital.
Yeah. So raising capital is not an issue. Valuation, we don't know till the time we do the actual exercise and see how it happens. And regulatory requirement, we are complying all regulations.
And there is because government is a key shareholder in Safaricom, there is no pressure from government that says we want these entities split. No, there is no pressure or a timeline. But this has always been on the table. That is this something Safaricom should look at and see. I think the way to see it is that anything that we do, it must be valuable to someone, to the stakeholders, right? You don't do anything just because you want to do it. You like one day, fine morning, you wake up saying that, oh, let's split M-PESA. You don't do that, right? The splitting of M-PESA must benefit someone, yeah? And that benefit someone is whom? How does that benefit comes out? So this is why it has not gone off from the table. If you ask me, as a management, do you evaluate? Of course it is part of the evaluation that we do. Is it still there? Yes, it is still there. Now, what we have not done is, we have not concluded simply because you haven't found out where does that value come and who does get benefit out of it, right? So I think that's where the space is. So it's not for me to say, it's not something that it's not to say that we are not going to ever look at it ever. No, that's not what we are saying. But is it something that we are in a time bound and situation saying that we have to do it? I think that's where the space is. Are there any timelines on when this review at management level or at board level would be concluded? Because it seems, looking at it from the outside,
it seems like the arguments right now are in favor of not splitting out M-PESA. There's no compelling reason to split out M-PESA from Safaricom, right? Separate the fintech and the GSM business. But is there a point where the board can literally say to shareholders, look, we've wrapped up our review. We don't think there's a case here. We don't think there's any value proposition for the shareholders. So we'll just keep this, this business as it is. And if we need to revisit this in 3 years, then maybe we'll do that.
I like the way you framed it. There is no compelling reason for us to do that split now. But would there be a compelling reason in future? It could be. So from a timeline perspective, we are not necessarily bound by any timeline, but I can tell you that this is something that we refresh every year. And when recently we just did our strategy refresh for next 5 years. You know, this is the last year of the previous strategy and 26 to 30. So in the next strategy horizon, this is something a part of our deliberation, consideration, and also probably a board consideration. Should we do it? Should we not do it? We'll definitely get into a conclusion in that phase, but it's not something that gets concluded in the next 6 months or so.